Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Let's keep up with our euro analysis. So those of you who have read our weekly report, you probably know that that was a bit not common report. It's a bit special report because there we trying to combine things that's very difficult to put together. So from one point of view, we see very good statistics in the United States economy. At least maybe it's not really outstanding, not perfect, but it's better than an average statistics. And in general, we could treat the overall situation in the United States economy as a positive. So we talked that unemployment stands at lowest levels, consumption stands at high level, stock market at the historical top, and all these moments are signs of the overheat of the economy. And suddenly, in such circumstances, we've got the news from the Fed that it intends to cut the rate. And that is really confusing decision, and we were trying to investigate what stands beyond it. Our suggestion could sound a bit mystical, and definitely it is arguable, but we suggest that Fed either waiting for something or it sees some changes in overall background and statistics that should come on the surface in the nearest time that led Fed to proceed with the rate hiking cycle. But until the signs will be obvious, they try to kill the clock and expand the time waiting when this will happen to not upset the markets. Because if Fed right now turn to the rate increase, it will be absolutely in opposite direction to market sentiment, market expectations. And Fed worry for possible significant demand for the United States treasuries and drop on the stock market. So, and it means that either till the next meeting in July or maybe a bit longer until the moment where the truth probably will come on the surface, markets will follow with this Fed statement. And we already see this, not only on the euro currency, but also on the gold market. That leads to a really explosive rally on the market. But if we'll try to understand the real reasons of this rally, it's very difficult to find them, because the European Union economy stands not in a better situation, or even maybe in a worse situation. Draghi also talked about the possible starting the new wave of the quantitative easing and cutting the rate. The tariffs with China has no significant impact on the United States economy. It's more theoretical, while the China is turning to the recession. And we put the recent update by the Fathom Consulting, who shows that China could repeat the Japan destiny, because the dynamic of the gross domestic product of the government yields reminds the situation in the Japan in the 90s. And they forecast that the Chinese economy will slow down to the 4-5% within a couple of years. So that just confirms our suggestion that the tariffs is a tool in the hands of the United States. They do not work in the same degree and the same efficiency in the hands of other countries. And that has come from the outstanding role of the United States dollar in the global trading. And in fact, the United States control the global reserve currency. That gives them some advantages and privileges. So, and definitely it makes the impact on the China, but the question of the impact on the United States economy, well, probably it exists, but not as strong as markets suggest. But anyway, in the current circumstances, you can see that market stands on this Fed course that was put on the recent June statement, and you can see the rally. Until our decisive moment will happen, this tendency probably will continue. And in current circumstance, we will keep an eye on two levels. First one is where market stands right now. This is our OP target that we discussed in our weekly report. Actually, guys, this is very strong resistance area. So market hits the OP. That's confidence resistance 1376, 1390 area. And also market stands at the overbought. So definitely not the point for taking the long position. But strategically, for us, is more important is the XOP, the 1550 area. Why? Because this XOP coincides with the neckline of the larger, big head and shoulders pattern on the weekly chart. So that's the nearest strategical target, next destination point. It's not very interesting this week because it stands far in an overbought area. So market already stands in overbought. So and this week we are not interested with it, but we will keep in mind this area. Speaking today trading situation, well, that's really strong resistance, and we could count, at least the odds suggest, some moderate retracement here. Because actually the minimal target of our hand shoulders pattern is completed. Recall what we talked about our hand and shoulders here is kind of the left shoulder, head, right shoulder, A, B, C, D, OP target has been hit. So in fact, this pattern hits the minimal target, and we could treat it as not failed. So it's completed, but taking into consideration the speed of this operation, the pace, definitely we could say that market a bit later will proceed, or should trying to proceed to XOP after some moderate pullback will happen. So speaking on the pullback, what retracement could be? It's logical to suggest that market should stay above the neckline, just to keep well with this pattern, and drop below the neckline after the OP will hit. It's not a good sign for upward continuation, especially taking into consideration, as I said, this really outstanding explosive action. Well, retracement to the neckline should be enough sufficient retracement to leave the overbought condition and show the respect to this resistance area. So that's approximately 1320 area. That's what we could say on the daily. On the intraday charts, on the 4-hour time frame chart, we have some special levels here. So you can see that 1320 area that we have specified is a confidence support on the 4-hour time frame chart. Here we need to take into consideration two moments. First of all, most recent leg up, which is actually a very good thrusting action, despite it was interrupted here. But as you can see, the second half of the thrust is as long as the first half. And on the first interruption, there were no close below the 3x3 moving average. No breadboard actually has been formed. And we could treat this thrust as the single whole thrust up. And here we could keep an eye on the possible upward continuation patterns. Maybe it will be bread and butter. Maybe some ABC retracement will be formed right with 1325. That's all we keep an eye on this thrusting action. So second moment on the 4-hour time frame chart is confidence support on 1272, 1294. This level we could treat as the vital level for a bullish setup, because breaking first confidence, coming to the second, dropping below the neckline, and breaking the second confidence after outstanding rally, that will be the hint and really negative sign for the market. That's why if we would suggest that we will get good entry opportunity here, our first step probably is better to place below the second confidence. Once market will start upward action, we will move to the break even or just below the first confidence. So that is the idea of the trading. So Judd Napoli has the very great example with two confidence areas in his book. And just to not bother you with a long discussion, I will tell you that idea stands as follows. So when the first market hit, stop stands here. When you take in the position in the first confidence, market starts bounce up, reaction in the first confidence. The Napoli move stops to below this area. Why? Because if market indeed bullish and will start upward action, first confidence should hold the action. That's why it's not necessary to keep initial stop below it. But once first confidence will be broken, you will get just minor loss, or even you could move stops to the break even on the first bounce here. So that's the advanced comments from Judd Napoli on dealing with the two confidence when you have them in a sense relatively close. So, but that is mostly a theoretical issue. On the hourly chart, guys, we do not have something really special yet, because market just has hit the OP target. No patterns have been formed. So if you would like to sell the market, you have the not bad background, because we have strong resistance area. One thing that we still do not have is the good bearish reversal pattern. But at the same time, I would like to say that if you take a short position on intraday charts, do not marry this position. Try and take the nearest target, because overall context is bullish. The upward momentum is very strong, and if market will show the retracement, it will not be too significant. Keeping holding the short position here for a long time, this could be really expensive. And in the current circumstances, it's not forbidden to trade euro on the short side of the market when we will get the clear bearish pattern. But we also should consider a realistic target. So if we are talking on retracement of the 1322 conference support, so probably the target also should be somewhere in this area. So that's our view on the euro. Let's see what price action we will get today.